Where is the Omaha real estate market as we hit peak selling season? Where are home prices as we hit the month of April? What do we have in terms of current inventory? What about interest rates? Why hasn't the real estate market crashed? What about inflation and jobs? All of these questions and more will be answered in today's video, and we're going to get started right now. Let's start with home prices. The median sale price for the month of March was $320,000. That's up 3.2% compared to last year. Prices continue to go up in the Omaha market, and 3.2% appreciation is more of a normal year-over-year market number. Let's look at prices over the past 5 years. Now, this is month-to-month data. Prices fluctuate month-to-month, so don't get caught up into month-to-month fluctuations. Now, if we take the last 5 years and we look at the rolling 12-month average, that means each data point is 12 months of activity. This flattens out the month-to-month fluctuations, and you can see a nice steady increase in home prices over the past 5 years in the Omaha market. Let's separate new construction from existing. Look at the median closed sales price for new construction. It was flat year over year. Now look at the data in red. That's existing sales. Look at how for existing sales, prices were up 5.5% compared to the previous year. I still talk to people who believe the market is due for a crash, and I get it. Prices have skyrocketed in the past 5 years. 4 years ago, the median closed sales price in March of 2020 was $220,250. Why hasn't the market crashed? Well, number one, you got supply and demand. We have more demand than supply. 2 is the lock-in effect. There are people who would like to move, but they just don't want to trade a 3% interest rate for a 7% interest rate. We are very fortunate in our market because we have room to grow and we have plenty of new construction. I have friends in other markets where in those markets, especially on the east and west coast, there is very little, if any, new construction. Those markets, the entry-level price point is starting in the 600s. Now, those buyers are completely shut out of the real estate market. When existing homeowners are locked into a low interest rate, you have the 4 Ds: death, divorce, diamonds, and diapers. The only people who are moving are people who absolutely have to move. Those are people who are going through a significant life event. People are passing away, people are going through a divorce, people are getting married, or people are having a baby. The other major life event is relocation. And if you're relocating to the Omaha area and if you need assistance, my contact information is in the description below. Interest rates are higher, but that doesn't stop people from buying real estate. Another reason prices have not come down is because of age demographics. The largest population segment in Omaha right now is at the peak buying age. That's also driving demand. Now, some people right now who would like to buy, but they just simply can't afford to buy. Those are people sitting on the sidelines. Now, I'm aware that there's talk of a recession. Now, in recessions, the Fed typically lowers interest rates. Look back at the 1980s. If we look at the interest rates in the 1980s, this graph shows the fixed rate mortgage in the United States during the 1980s. Now, the shaded areas represent recessions. Look what rates were doing. Now, back then, we had a Fed chairman by the name of Paul Volcker. Back then, we had runaway inflation. It was around 15%. In order to tame inflation, he jacked up the federal funds rate. That caused us to go into recession. Let's look back at home prices in the 1980s. Even though we went through 2 recessions, home prices did not go down significantly. Why? That's because the baby boomers who were born in the 1950s were hitting peak buying age in the 1980s. That kept demand high. There's a good chance that we will go into recession, but a recession does not mean home prices have to come down. Different parts of the country react differently with recessions. The Omaha market tends to weather recessions quite well due to our diverse economy. Nobody has a crystal ball. Trying to time the market is foolish. Now, the best time to buy real estate was 20 years ago. The next best time is today. Buy something you can afford, and that's within your budget. Don't max out your budget. Just because the lender says you can afford a $400,000 home doesn't mean you should. Inflation is a hidden tax. Nations and governments collapse when inflation is out of control. That's why it's so important the government gets inflation under control. Where is inflation right now? Now, inflation is still running hot. Last month, inflation was at 3.5%. The goal is 2.0%. That's what is keeping interest rates higher for longer. Remember, the Federal Reserve raises and lowers interest rates. Now, the Fed controls the federal funds rate. It does not control the 30-year fixed rate mortgage. So where are mortgage interest rates? Now, interest rates are well above 7% at 7.34% for a 30-year fixed rate mortgage. Everyone was hoping rates would come down a little this spring, but since inflation is running hotter, you're going to see interest rates higher for longer. Now, this is my opinion. If and when interest rates come down, you're going to see activity go through the roof. A recession may actually help rates and affordability. However, don't buy a home going into recession unless you're sure your job is stable. If you're laid off, you may be forced to sell, and that would not be a sale from a position of strength. Interest rates typically follow the 10-year Treasury yield. If you can get 4.36% for no risk in a government security, it makes sense that investors would demand more since there's more risk involved with a mortgage. Another item I want to look at real quick is mortgage applications. Look at this graph for mortgage applications over the past 5 years. The orange line is the 30-year fixed rate mortgage. The blue shaded area is mortgage applications. More mortgage applications equals more buyers. Look at how mortgage applications have dropped off since rates have increased. Rates went up, fewer mortgage applications, which will eventually result in fewer sales. What about closed sales in Douglas and Sarpy County for the month of March? Sales were down 6.7% from the prior year. Last month, we only had 766 closed sales. If we look at closed sales over the past 5 years, look at the peak of sales last year compared to the years of 2020 and 2021. Sales are down, and I think there's a wait and see type of attitude out there. Where is the current inventory? We have 1,617 homes on the active market in Douglas and Sarpy County. That's up 22.3% compared to 2023. More choices is better for buyers. However, we still have a shortage of existing homes. Look at the difference between new construction and existing. And if you have a home below $300,000, it's still a great time to be a seller. If you look at new construction versus existing, and if you look at months of supply of homes on the market, look at existing. We have less than 1 month's supply of homes on the market. Look at new construction. We have 6.9 months supply of homes on the market. So that means with new construction, we have a buyer's market, and with existing homes, we have a seller's market. And remember, in order to be a seller's market, you have to have less than 3 months of inventory. A balanced market is between 4 to 6 months of inventory. If you have a buyer's market, you have above 6 months of inventory. So in new construction, we have a buyer's market. Let's look at days on market for new construction and existing. Look at how homes on the existing market are flying off the market. The median days on market is 4 days on the market. Look at new construction. The median days on market for new construction is 42 days on the market. What about jobs? This was updated April 4th. Look at the unemployment rate for the United States. In February of 2024, we saw unemployment at 4.2% compared to 3.9% in 2023. What about Douglas and Sarpy County? Unemployment in Douglas County was up to 3.2% compared to 2.5% in 2023. Sarpy unemployment was up 2.9% versus 2.1% last year. Obviously, if you lose your job, it is bad news. However, it's actually good news if you're in the market to buy a home. If jobs are lost, it takes someone out of the real estate market. And that's good news if you're a buyer.